introduce your next guest. Good friend of mine. He's been a part of the Accelerator experience for quite a while, a number of years now, and is such a valued partner of Tax Hive. We feel like inside the Hive, there's all of this cohesive collaboration that happens. When people have common interests, and they also have common intellectual property that says, hey, we're saving some money on taxes over here. What about all of my other money? Is it growing for me? Is it benefiting me? Am I doing all of the right things with my money in these other places? And Rob has brought his entire team out. They're out of New Jersey. Epic Financial. They are incredible. They're extremely customer-centric and making sure that they do best by the client. That's why we love working with them. And Rob is about to change your mindset about how you think about money and the way that you grow and protect that money over time. So will you guys put your hands together and give a warm welcome to my friend, Rob Gill. Yes. Please,
So how's everybody doing? Happy Trajectory Tuesday. I will not bore you with money talks, but I do want some excitement, right? Because money has a charge to it, and within that charge, there's a mindset, and within that mindset, it's either scarce or abundant, right? So long before you start making money, the mind's got to be right in order to really have that money come in and to keep it. How many folks here make money, and then sometimes it finds a way to get out of your pocket unnecessarily? Raise your hand. Can I get a yes? Say yes. Yes. Say yes. All right. So thank you all for being here. Give yourself a congratulations. I know that, by the way, I am from New Jersey. Let me pivot. My name isn't Joey. I'm not from Brooklyn. That's okay. I like Joey Brooklyns, but I'm an Irish guy from New Jersey. Not that it matters, but I just wanted to throw that out there. Bayonne, Hudson County. Where are you from? Okay. I don't know if you would survive Hudson County, though. I'm just kidding. So anyway, when it comes to your money time freedom, and when it comes to understanding how to really be able to put yourself in the right position, what happens is we get a bunch of different people that give us a bunch of different opinions based on whatever's happening at that time, and then we buy a bunch of products, and they're not really connected, they're disjointed on some level, right? So if we have all these financial products but don't really know what that looks like on the distribution side, and I'm going to keep it light, what begins to happen is chaos and confusion, and we make decisions based out of scarcity instead of abundance. Does that make sense? Can anyone relate to that? Right? Happens to me to this day, I promise. So now I look at Tax Hive, right? Tax Hive, obviously the value that you guys are getting right now is incredible, right? All these different pieces for the financial puzzle. But with that being said, who here has in their life all of their financial educators on the same place for your mindset that work together for you? Does your accountant, does your attorney, does your fiduciary, does your trust officer, do they all work together? Is there a landing place for them so you guys could sit down and meet quarterly? Does that happen, yes or no? Okay, it's not, did anyone say yes? Okay, it's not bad, but that's the frame that we all live in, except for the 1%, 1%, 1%, 1%, 1%ers, right? They have what they call a fractional family office, right? That means they have accountants, lawyers, attorneys, fiduciaries all on the same page for the benefit of their thinking, not only now, but generationally. Can you get there? Yes. How do you get there? Well, you got to have tools. You got to understand what your goals and objectives are. And you got to be able to withstand economic winter when it comes. The only way you could do that is if you have a plan in advance. Make sense? I'm out of breath because of the altitude, so I'm going to work through it real fast, I promise. So let me tell you a little bit about me. Rob Gill, Bayonne, Hudson County. We own a couple of different seven-figure businesses. I'm the author of a book, Surviving Success, right? We also have an audio version, and the book is about my journey with money and all the beautiful mistakes I made along the way. Now, I've been lucky enough to not have a drink since 1996, July. So before that, I lived a life of self-imprisonment, scarcity, never gonna amount to nothing, being in a bar, getting shot at in May. I didn't get shot, the person I was with got shot, survived, thank God. But then when I got sober, I had the gift of really freedom, the gift of choice, the gift to think before I react and act. And I still fall short of glory on a daily basis, but just not with alcohol, right? So from that perspective, I am as human as you possibly can be I'm not a college graduate. 3-4 years I was there. Well, I was there 4 years. I hung out for 4 years. I was there for like 2.5 years. 67 credits. And I say this with humility, I'd put me on anybody. I'll bet on me any day of the week, right? And the reason why is because I made beautiful mistakes along the way that have allowed me to have a relationship with the good folks at Tax Hive. And if everybody here looks at their businesses, if you learn to merge ecosystems, what'll happen is your business will grow just like ours did, where we went from 10 to 1,000 appointments a month. Let me say that again. We went from 10 to 1,000 appointments a month. Do you think in your business you could increase your business tenfold if you understand how to merge ecosystems, yes or no? Yes or no? Okay, I'm not talking about a networking group. I'm talking about aligning with folks that can help your business grow while you help their business grow. Not going to the diner on Tuesdays and just sharing referrals. That's not what I'm talking about. So if you look at Epic and Tax Hive is on the tax strategy side. Epic is on the fulfillment of the financial planning side. So if Epic needs an accountant, Tax Hive, if Tax Hive wants to have the Epic team come in to fulfill anything you guys want to do, that's who we are. But to take it a step further, I want you to think about what I'm going to say right now. And all I ask is if you put your phones and your computers down, unless you're taking notes. Because when you get back home, you got to start sprinting, right? So this right here is a gift of my journey that I hope at least one person in here could benefit from and change the life generationally of your family, right? That's the key here. I come from 33 first cousins, I'm the youngest. My dad had 7 brothers and a sister. And, you know, for me as a little kid, going to the barbecues and all this other stuff, I saw blue collar. I love blue collar. I'm a blue collar person. I don't feel comfortable around the 1%ers. I can hang, you know what I mean? But I like to be over here. I love the blue collar. So I'm going to bring you the blue collar mindset into economic financial freedom. You guys want to hear about that? I'm going to give you some takeaways that you can do right away. So think of Tax Hive. Go back to the day you first clicked the link on a video you saw when you first met Tax Hive. Can you guys see that right now? Do you remember how you first met Tax Hive? I'm assuming it's through social media. Am I right or am I wrong? Okay. Am I wrong? Anybody? Anybody give me, how did you meet Tax Hive? Good. Referral. Besides the referral, anybody meet Tax Hive through social media?
Yes.
Okay. I'm saying it because they deploy capital into that. And a lot of people on social media do that. So you always got to be careful who you come across. Now, if you met it through social media and you're here today, are they exceeding your expectations based on what you paid for? Yes or no? Yes. They said yes, folks, right? So the point is, in any business you do, no matter who your competition is, you want to provide more value than your competition. Does that make sense? Give more and you get more. Give more and you get more. If you live in the mindset of abundance, and sometimes it's hard, especially when things get tight, right? If you live in the mind, you see that? I know. If you live in the mindset of abundance, what'll happen is you'll be able to take the next step forward. So today, I'm not going to recommend any strategies. I'm here to give a full education. Epic Financial Strategies has 2 divisions, an insurance division and a registered investment advisory division, right? And then partnerships with Tax Hive and other law firms that we do business with. So today is not a sales pitch. I can promise you that. Keep your checkbook in your pocket. Even when you sit down with us, you're not going to pull out your credit card. It is not a sales pitch. It is education first and foremost. And when it comes down to really understanding how to, if you're entrepreneurs, really understand your minutes and your days of the week, that's what we're going to try and get into. This is going to be a tailored presentation afterwards, not today. But when you meet with us, it's not going to be cookie cutter. It's going to be custom specific to who you guys and gals are. Everybody has different businesses. They're in different ages economically, right? Different genders, different families, amount of kids. All these things are different. So if you get a cookie cutter plan, it's really not going to serve you at the highest level. That's why you want to have a mindset of a fractional, if not family office mindset. Fractional, if not family office mindset. Our goal is to help maximize cash flow, show you how to leverage your assets with more wealth and less time, decades into days, by creating the optimal amount of wealth with little or no additional out-of-pocket cost, very simply through the integration and coordination of your overall assets and understanding how they can work together. You're going to be learning how the financial industry as a whole has failed you, right? Even if you play by their rules, you may not be aware of certain things. We're going to teach you folks how to become your own bank, how to create leverage, how to create ecosystem mergers, and how to get multiple uses of each and every dollar. And we're going to show you how to maximize life insurance, amongst other things. Now, in our opinion, remember, the financial services industry is an industry that makes trillions of dollars. And how do they make money? They use your money, right? So one of the things that they come up with is the 4% rule, guideline for retirement. I'm going to read this direct for you guys. And you can take pictures. There's some really good stuff up here, just so you know. It's used in traditional retirement planning to determine how much you could safely withdraw. So if you, what's up, man? How you doing? Thank you. So if you have $1 million in an after-tax brokerage account, I'm not talking about an IRA or 401k, the 4% rule says take $40,000 a year out. Just live off the interest, don't spend down the principal, right? Who's heard that before? What happens when inflation kicks in each year? The $40,000 is worth less each year, right? You're still paying tax on that $40,000. Now remember, if you do principal and interest, the principal portion you're not paying taxes, but you can say, Rob, I'm gonna run out of money. You are if you don't have the right plan. That's true. So how do you get to the right plan? How do you connect the dots? How do you create something new off of something that exists, right? So all debt, another thing that they like to talk about, all debt is bad debt, unless you're buying their product, right? So, and I'm gonna speak in general terms right now, okay? A typical fiduciary wants you to put all your money in the stock market and buy term insurance. A typical insurance agent wants you to put all your money in insurance and minimum in the stock market, and at the same time do alternative investments. Somewhere there in the middle there is where it's all about, right? That's where the magic is, in the middle. How do you have proper planning on the wealth management side? How do you have the proper amount of insurance that doesn't run out of time? And what does your alternative investments look like, money making while you're sleeping? And you may say, Rob, I don't know how to do that. We'll show you how to do it. But my point is, you have to start shifting your thinking and understanding different asset classes. Bad debt would be credit card debt, right? Nothing that's going to give you any generation of revenue. High interest rates. Strategic or intelligent debt would be, hey, if I go buy a business and I'm financing that business and I'm getting money every month, or if I'm buying rental real estate, right? One of the things we do at Epic is we deploy a lot of capital into our social media, and we could show you the revenue off of that. So that's a way for us to make money as well. And we're going to show you how we use the money to get to the money and how multiple rates of return are going to exist. Another falsity is high income equals wealth. I know folks that make $1 million a year and have no money at the end of the year and maybe save $20,000, $30,000. Over leveraged, right? And now you're chasing a rate of return. Now you're scarcity mindset. Now you're watching a video about Bitcoin, dopamine's kicking in because you're scrolling, and you're selling your 401k and putting all into Bitcoin at the wrong time. It happens. So dopamine is part of this conversation. I'm not a doctor. Sometimes I'm a financial doctor, but I'm not a doctor, right? But we have short-term instant gratification dopamine versus long-term arduous dopamine. Arduous dopamine is where you want to be. You want to have that scale of pain-pleasure properly done in your mind, right? So what does it mean to become your own bank? Now, let me just say this. If I wanted to buy a bank today, They're gonna do a background check. I have to come up with a surety bond. I gotta go look at the bricks and mortar physically where the bank is at, right? Folks, stay with me. It's gonna go fast. This accident's only gonna last another 20 more minutes, I promise. This is good information. If I wanted to buy a bank, I gotta do all that. Now I own the bank, and what happens? Well, the bank lends money out to you. What's your name?
Ronnie.
Ronnie, and charges her 7% for whatever. Then they loan money out to you. What's your name?
Rosa.
Rosa. They charge her 15%. Then they loan money out to you, Tammy. They charge her 27%. Mortgages, student loans, credit cards. And they make 40 cents on every dollar you leave there. Right? So it's fractional reserve lending, but they make multiple use of each and every dollar, and they don't take any financial risk, they take credit risk. Think about it. The bank is showing you how to do it. If you could mimic the bank without buying a bank, is that something you'd want to hear about, yes or no? Has anyone seen videos about become your own bank on social media? Okay. By the way, is anybody here insurance licensed? Who else? Okay. All right. I'll give you a job. I get 1,000 appointments a month. All right. So it starts with understanding the 3 principles of life insurance and really being able to understand if you overfund an insurance policy. Now, within the insurance industry, there's Bloods and there's Crips. The Bloods are IULs, the Crips are whole life. They fight for no reason, silly. The question is, how do you overfund the policy, have that money working for you while you put it somewhere else? That's the key. You can do it in business as well, okay? The living benefits would be, how do you spend down your other assets in life, 401k, real estate, other things, knowing your death benefit's not gonna expire, because in term insurance it expires. In IULs, it gets very expensive and could expire, but whole life seems to stand the test of time. So if that death benefit doesn't expire, you could spend assets down knowing the death benefit's gonna replace it. Are you with me so far? Okay. Now, everything I'm saying, we always wanna make sure that you're connecting us with your accountant, your fiduciary, your trust officer, your insurance agents, so we can show you how to integrate and coordinate this stuff. Why is this so powerful? And here it is as entrepreneurs. 3 things that you gotta consider is financial security for your loved ones. A lot of entrepreneurs, we see the video where it's not a straight line, it's like this, right? For success, it's crazy. I've been through it myself. Not just tax write-offs, but tax strategies. What does that look like? New administrations come and go. How can you get these tax strategies? And then business stability. Do you have partners? I do. Now, in my business, I'm the engine, so they would need a policy on me, right? My economic value is north of 50 million to my partners. However, if you have partners, you want to make sure that, God forbid, if they shuffled off this mortal coil, that means you've passed away, that you could replace their income or their value to the company. Buy-sell agreements, key man, key women, right? Really important. You don't want to have a partner who passes away, now you're going to become partners with their spouse that know nothing about the business. It happens all the time. The right kind of life insurance, in our opinion, is mutually owned carriers, where you overfund, and it's dividend paying. And I'm going to show you some illustrations right now of what to be careful of and what to look for. And any insurance agent is going to hate what I do right now, because it takes away their commission. But when you get $1,000 a month, 1,000 leads a month, you don't have to worry about commission. That takes it off the table. So if there's no commission mindset to deliver the goods to a client, what begins to happen is the relationship is even more powerful. And I would implore 95% of the agents that fail in this business to adopt this immediately. And it's a way they can stay in the business forever. Okay. Man, I'm still out of breath. I just lost like 46 pounds in the last 6 months, and I'm out of breath. This is crazy. So life insurance is not an investment, but it's a tool, it's a strategy and a mindset that makes your other products better. And they're replaceable. Think of a Swiss Army knife. I'm going to show you right now what an overfunded whole life insurance policy looks like. Get your cameras ready, take good notes. You're going to have some questions when I'm done. This is important, okay? I want you to look at this right now. I'm using big numbers on purpose. I just want you to know that. So this person, value client, puts $25,000 a month into their whole life policy, right? $6.7 million death benefit. And I want you to see in the first year, there's a whole life policy, that the net cash value is $75,000, of which 74 is from a dividend that first year. Right? Now, let me freeze for 1 second. So I'm going to give you a quick, this is important, folks. If you put $300,000 and you're under 59.5 into, and I know you can't do it into a 401k, but just entertain me for a second. You could in a pension, but let's just say it's in a 401k. You put 300 grand in. The next year you want to cash it out, you're going to lose 40% of it for taxes and a 10% penalty. So that 300 would be worth 180, right? Here, the cost of insurance is $225,000 in year one. And there's a commission there. Now what happens is you'll get good guys, gals that speak my language on videos, and they'll show you this policy and try and deliver this. And it happens all the time. More than you could imagine. Right? Or they'll tell you to do an IUL. Now, what's interesting, and I want you to see this, I can't see. How old is this person? Anybody? 40? Okay. In retirement, if they went from, what is it, 40 to 60? All right. In retirement, their income off of this would be how much? Yell it. So their income would be $468,000 a year. Now, I own 12 policies. My first 6 look like this. This is tax-free in retirement, just so everybody knows. Up to basis, meaning how much you put into the policy. To maintain tax-free status, you would then borrow. So that's the golden nugget when it comes to life insurance from a tax perspective. You don't get a write-off on the way in. However, if you made this a pension, you would, but then it would get taxed like a 401k and IRA. But if you kept it simple, you put 300 grand in for 20 years, you get $458,000 in retirement, tax-free. Are you with me so far? Yes or no? Come on, guys. I got like 15 minutes left. Seriously, this is going to change your life for the better. So now, we are not recommending this at all. We're just simply showing you what you have to be aware of. And this isn't bad if you know all the facts. It's only not optimal if you were misled. Fair enough? Here's an overfunded version, okay? Get your cameras. I want you to notice in the first year, they put in additional $300,000. Just the first year. Now their net cash value is $423,000. Now the way it works, and I'm going to give you a little niche, insurance agents, if the person's doing $25,000 a month, within that first month, the client can wire an additional 300 grand and have access to that 11 days later. So why am I bringing that up? Because we have folks that want to buy real estate or other businesses, and the money's sitting in savings. So when they overfund it for that 300, they could take it out and go buy that rental real estate. And now the renter pays back the policy. But in that one little move, they get 7 different rates of return. And I'll explain. What's up? Oh, I thought I heard somebody. They get 7 different rates of return. Within the whole life, you get a guarantee plus a dividend. You overfunded the policy, you put it into real estate. Now you get 4 more rates of return. Number 1 is the rent payment or cash flow. Number 2 is the mortgage interest write-off. Right? Number 3 is appreciation in that real estate over time. And number 4 is depreciation. So now we're at 6. 2 in the insurance, 4 in the real estate. The 7th is to become your own bank, when the renter actually pays back that policy. So remember, if you have a mortgage that's 15 years, right, on a rental property that somebody else is paying for, after 15 years, the renter paid it to the bank. You don't care because you didn't have to pay for it. However, If that was in your bank, it would still earn a rate of return after that 15 years. Right? Think about what I'm saying. $100,000 mortgage for 15 years may cost $180,000 back into the policy or to the bank, but if it's in your world, year 16, it's still earning a rate of return. You could finance a car like that. You could finance your own debt like that. You could finance college like that. You could buy other businesses like that, right? Now this one move takes your income from 4 and change, I think it was 458 to 529 a year. Tax-free, up to basis, bar and beyond. So now, how does it work with investments? Remember we talked about the 4% rule, right? Or I just showed you how you can fund alternatives like real estate or other businesses or finance your own debt. The key is how can you get multiple rates of return off of each dollar where your money's in motion? Does that make sense? If you keep your money in motion, it stays ahead of taxes, it stays ahead of inflation. It's stagnant inside of an IRA and 401k. It's even stagnant if it stays inside the insurance. As far as I know, the moon goes around the earth goes around the sun, and then our solar system is traveling through space all the time, nonstop, going around the galaxy. Everything is circular, right? When you keep things in a box, it stays stagnant. Retirement. Life insurance is a safety net and complements traditional retirement plans. So while you're climbing up that mountain of financial freedom, arduous, right? You're putting money away, on the way down, you want to make sure that you're not paying too much in taxes. If you have a $2 million 401k and you're taking 120 grand a year out, every dollar is going to get taxed at ordinary income. And if you don't have life insurance that can replace your income, in other words, your term expired, your IUL became too expensive, now all of a sudden you got to worry about outliving your money. And there's no one there. You had your planner during your working years, but the planner didn't educate you along the way. Where are they now? How is your 401k connecting with your rental real estate? How is your 401k rental real estate connecting with your business? Your wills, your trust, your estate attorney, your fiduciaries, are they all on the same page? So what I just described is on the right side of the page. It becomes a volatility buffer. Contract wealth is insurance-based products and annuities. Statement wealth is just 401ks. How do you do both? And it can be done. You don't want to just stay inside the box on the left side. You want to be on the right side. You guys with me? I know you're tired. Yes. I know you're tired. I get it. I know you're tired. How about we just stand up for like 10 seconds? Let's just get the blood flowing. Seriously, stay with me on this, please. This is for you, it's not for me. Just move around, because it is like you're getting hit with a fire hose. I get it. I understand. And by the way, I got ADD. I can't pay attention for more than 15 seconds. I got to go back and listen and write everything you can think of. But I just want you to stretch it out. We're almost done. We're going to get to a Q&A. All right? The left side is when all your money is inside of a box. The right side is when you're diversifying within and amongst asset classes. That's the key. Thank you for standing up. If you want to sit, feel free. I just want you to know that. Okay? It's important. Okay, so one of the gifts that I'm going to give away today is the Epic Wealth Accelerator Bundle. Okay? And this is before we go into a Q&A. And just bear with me here. Within this bundle, it's going to be a cash flow analysis. That's where we save on average about $9,000 once we have conversations with folks and we see where their money's going. So think of a bucket that may have holes in it that you may not be aware of, and we're going to show you how to plug those holes and recapture money and put it in your pocket where it belongs. That's one of the things that we're going to do, as well as showing you what a custom life insurance plan would look like, how that works and how that complements your wealth management side. The way we measure everything, and this is going to get into the first step into the fractional family office mindset. We have what we call the Epic Wealth Builder, which all your financial institutions are connected on this portal. Your mortgages, your account balances. You can't move anything on there, but it's an aggregated tool where we can see everything real time with the click of a button. and it allows the monitoring and measuring of exactly what you're doing, the fees, everything you can think of under the sun, and how these are integrated and coordinated. Typically, agents charge for this. We don't charge. And then you're going to get a one-on-one tutorial from it. 2 books. One is the Epic Path ebook. It's about 25 pages. It's a very good read. It's very simple. And then you're going to get the audio version of my book, Surviving Success. You get to hear my voice when you're driving. You may fall off the road a couple times on some of the things that I say, I promise, but it is entertaining, and it's all worth it. It doesn't cost you any money, right? It's just how to start thinking about money, how to start thinking about getting your planners in line. And if a planner doesn't want to sit down with your accountant or another planner or a fiduciary, then they may not be the right people. Or they have to bring you the right people, and they have to be like a referral. Has anyone gotten like, hey, here, call this accountant, he's good? That's not a referral, right? It's not. Because now the accountant's going to do his thing, her thing, which could be opposite of the planner's thing. You got to let accountability measure the day. Because if you do that, what's going to happen is things become a little bit more clear. And when things become clear, that's when acceleration happens, right? So cash flow and custom plan is worth about $9,000. The Epic Wealth Builder, they put $5,000 on there. But I got to tell you, the folks that really use the Epic Wealth Builder and on a quarterly basis meet up with us and really sit down and get to know it, this thing is priceless. The books are amazing, not just because it's not me, the books are really good. It's really good information on how to take that next step forward, right? And here's what I want everyone to do. Please, pick up your phones. Pick up your phone. Take a picture. Please pick it up. Not for me. Come on, pick it up. I see it. Take a picture. Once you take a picture, please fill out the information, your best cell phone, your best email, and in there you can put comments on what you want to talk about. You'll get the one-on-one tutorial with one of my experts over at Epic. They will take you through everything I just said. You don't have to buy a thing. There's no obligation, right? And within that, Alexa, what did I do to the thing?
Oh, just go back.
I can't. So when you take a picture, fill out all the information. And then we blocked off the next 3 or 4 days for our team members to sit down with you and take you through this process. And any questions you're going to have, I'll answer now, of course. Grab your phones again, guys, please. Real important. Picture information, it's going to go right into Accountantly, and then I'm going to have an agent that's going to take the call, okay? And it's going to allow you to really kind of just absorb everything that you're hearing here for yesterday, today, and tomorrow. And we'll connect with any planners here that you want us to connect with. We'll do the best we can in answering any questions as far as whatever's happening here. And at the same time, if there's certain things that you get from a tax plan that you want to fulfill on our side, we'll be able to do that for you. There's no financial planning fee. So fiduciary, they charge that. There's no fee for the Epic Wealth Builder. And anything we do over our process of 4 to 6 weeks, there's no fee unless at the end you want to take the next step forward with us, which we'd have that conversation with you. But it's important now, while you're here, to go pick up the phone, fill out all the, who didn't fill it out yet? Raise your hand. All right, you want to fill it out? You're not interested? That's a good one. Ed, his phone's dead. So you got to go see him. Who else didn't fill it out? Why? He just brought up a great point. He says he wants his wife. I agree with that. Have your spouse on the meeting. If someone says, oh, you don't need your spouse, you don't want to let them in your house, they're going to rob the jewelry, thank you. I'll make sure Eddie and Alexa sit down and book it outside at that time, if that's okay with you. Yeah. Always have your spouse, significant other, life partner, whatever the case may be. It's real important. And remember, we're going to talk about business planning as well. I'm not going to sit up here for an hour and a half and bore you with business strategies, right? But what I am going to talk about is how you can increase your business through ecosystem mergers. and love to get into that as well on our calls. Has everybody took a picture and filled it out? Who didn't do it? Tell on yourself. Your phone don't work?
I took a picture, my QR reader is not downloading.
Okay, so Alexa and Ed, this table right here needs your help. Just so you know, you guys are financial freedom fighters. So with that, I'm here. If you guys have any questions, love to answer any questions. If somebody could give somebody the microphone and walk around with the microphone so I could do some quick Q&A. Do you have a microphone? Yep. Yeah.
Could you go back to one of the tables?
Sure. So I'm going to go this gentleman first and then you second. What's your first name?
Jason.
Jason?
Already
Jason Brown.
touch base with you.
I have a Bayonne friend, Jason Brown. I've spoken to Jason a couple times. Jason Brown does, well, you want to tell folks what you do?
Yeah.
Because this is how you're going to merge ecosystems. Go ahead.
So actually, Tax Hive client as well as just signed up for API, and me and Rob have been working together for probably a month and a half, getting all my information in order. So the main business I have is a logistics trucking company, and a few other small businesses trying to get going.
We didn't plan this, just so you know, folks. But again, what's your question?
Could you just go through, so on these tables, right, age is the first column, makes sense, 300K is what you're putting in every year, the net dividends is what you're getting distributed out based upon that year.
Yeah, so remember, the warning here, these are good if you understand the long term. The warning here, though, is if you think this has become your own bank, it's not. That's my first point. So folks, when you want to become your own bank, you really can't do it on this policy until the third or fourth year. The other policy you could do in the first year. That's the key.
Go to the other one if you want the 600 at the first.
Yeah, but hold on. I want to stay with this because you're bringing up a good point.
Net dividends is what's being paid out based upon your interest made for the investment.
Based on your
Cash
con.
value is that, again, once you get to a certain threshold, you can take that out for that particular value. And then if you were to die at that particular age,
Yes,
that's what you would be paid out for.
100%. You want me to go to the next one? Go ahead.
And then after 65, right, so yeah, I guess that's the other part, right? I go to retirement, I get the 468 year over year,
Tax free.
tax-free, and if I die at any age, what's the payout?
So remember, by the time you're 65, your death benefit is now 14 million.
It stays there no matter what.
Well, now you're going to start spending it down.
Okay.
Right, so there's always going to be a death benefit, and you could decide on how you want to spend it down and what that looks like on the table. There's like 99 illustrations I could show, but it would confuse everybody. But essentially what you're doing there is amortizing down your death benefit. Make sense? You want me to show you the next page?
Next page, maybe like you said, if you want to, it's just to give you, you can get that cash.
It's faster, much faster. Business owners have money in their business, they love doing this.
So what's the, if I take that loan out, right, so I'll give that example, I'll put the 600K in, I give that out in the first or second year. How do I pay myself back? What does that look like?
So you get to decide on how you want to pay yourself back, right? Now the key here is you always want to create a model where you are paying yourself, and don't get comfortable not paying yourself because there's a loan interest, the arbitrage is in your favor, so you're borrowing money, and the rate. So, but even though you're borrowing from yourself, it's called non-direct recognition. Your dividend. This is Eddie Gardner, everybody. Your dividend and your guaranteed rate of return isn't being affected at all. So there's an arbitrage that's working in your favor, even when you borrow the money from yourself. And you get to decide how to pay it back.
I just need to look okay after this, one of our accounts.
Yep.
Yeah, great.
Rob.
Yep, hold on. So, right behind you. What's your name, sir?
Jackson.
Jackson, what do you do for a living?
I'm an IT services consultant.
Okay, so how many, would you like to get more clients?
Yes.
What's the best way that you currently get more clients?
Talking to them.
Ha-
They reach out to me via Apple's website.
Okay, so what if all these folks were able to sit down with you over the next 2 or 3 weeks to talk to you? Would that be meaningful?
That would be awesome.
And then what could you give to them as an ecosystem merger back?
I could give them,
Do you have a community to share with them for their services?
so I could
Yeah.
exchange services with them. So I could give them IT support or infrastructure.
Yep. All right, so Jackson said he can give you IT support and infrastructure. That's what an ecosystem merger looks like, right? And then there's stuff that he could also give you where you could get more clients as well. Anyway, which question?
Yeah, sorry, I wasn't ready for a pitch there.
That's okay. That's what made it better. Because I edified you.
Thank you.
You didn't have to edify yourself.
I appreciate that.
Yes.
Yeah, if you do,
Go ahead.
any pain points,
If you want, by the way, put the microphone to your mouth because they're going to hear you right now.
please come talk to me if you have any IT pain points.
That's an ecosystem merger, folks. Go ahead.
I am entirely illiterate with this.
Tell me more.
Health insurance.
Tell me what you don't understand.
I don't understand it. I've been taught to avoid it indirectly, I feel like my entire life.
Yep.
It's gonna be 33 years. But
How you doing?
if I wanted to understand it more, like, are your resources, the book and the thing at the end, right? Are those geared towards someone that already understands what this is and what it does for me from a wealth generating perspective, or I need to go do something else first?
Yeah, no. Excellent question, by the way. What we do is constantly provide education. We have a lot of videos that do that. And we dig very deep into your own customized plan when it comes to when we get to this point. So when you folks sit down with us, please, this is important. Our process is 4 to 6, sometimes 8 weeks, 6, 7 calls. Any questions you have on call 1 will be answered by call 3 or 4 as we take you through our success process, and only then would you decide to move forward or not. So there's a lot of questions that get created along the way that I wouldn't be able to answer in a vacuum right now, but what I do assure each and every person here is they will walk away fully educated in the way that they never were before. Yes?
Follow-up question to that. I've been in a situation before with vendors who have said exactly what you just said.
Get the microphone.
And then when I do have a question, the response is, oh yeah, we have this resource, oh, we have this plan, oh, we have this. And
Yeah.
I still have to go and find the answer, right? It's another resource that I then have to go and dig into.
Just don't let them in your house. They're going to rob your jewelry. We assure you that that won't happen. You're going to have to see that, maybe come back in 6 weeks and said on videotape that we made it clear that we would be able to do that for you in a way that no one else did before. And it's on video.
Well, I didn't bring my ski clips, so I'll come back.
Action Jackson. All right, who's next? Over here. Speed. Let's keep everybody awake. Yes.
Okay.
What's your name?
The money you're putting
I'm sorry, what is your name?
Kim,
And what do you do for a living?
horseback riding tours,
Really? Where are you located?
goat yoga.
So all your clients come from that specific area? Okay. All right. Go ahead.
The money you're putting in,
Yes.
is that from your company in, so it's,
Could be.
is it after tax or before tax?
These scenarios are after tax.
After tax.
So think of a giant Roth IRA with no discrimination. Now, you can through your company do this with a pension plan and you would get a massive write-off. But on distributions, you would have to pay ordinary income taxes. So the education we provide is at the next level, and the follow-up we have is second to none. Yep. Who has another question? Sorry. She's got the mic. What's your name?
Michael,
What do you do for a living, Mike?
construction.
Awesome. What's your question?
Is there an age you recommend that we should start this?
Today.
Thought maybe I was too young or something.
No. Even like parents' juvenile policies. Listen, I'm not saying stop everything and do life insurance, but today's the best day to do it. Now, from a construction worker standpoint, business owner standpoint, there's many other reasons why to do it. But once you start that become your own bank mindset and you tie it into with tax strategies, things become different pretty fast. Next question. They're making you run. How you doing? Sir, what's your name?
My name's Mark.
Mark, what do you do for a living?
I own a salvage yard.
A what?
A salvage yard.
Awesome. Where?
That'll be finished.
Okay. Talk to me.
I'm 58 years old. Is it too late?
You're 58 years young, so I'm 54. I just recently bought my biggest policy. I own 12 of them, so it's never too late. As long as you're healthy.
I was looking at taking some cash and investing it into a cottage.
Great.
Would it be better to invest it in this than borrow the money and put it into the cottage?
So here's let me just give a 10,000 foot. He just said he wants to invest into a cottage. Should he invest into this first and then put it into the cottage? So when we do our cash flow analysis, we give you everything we have, we're gonna find dollars that are there on a monthly basis that you didn't know existed, plus whatever you save. As you create the insurance plan, what you're now talking about is the money you have in savings to then put into the policy just for like 30 days so you can take it out and put it into the cottage. Is the cottage gonna produce rents? Do you know what, just give the mic, do you know what the rent roll would be typically on average? Do you have an idea what it's gonna be?
Maybe I'm running into my daughter for about $1,000 a month.
Okay, even then, you could still, that is still now something you're getting multiple rates of return on. She's paying $1,000 for the rental property that's going to increase in value, that's also going to give you a write-off from a depreciation standpoint. And yes, running the money through here could be an optimal play. We'd have to look at everything first, but yes, that would be a simple scenario. Any other questions? Good job.
Speakers.
Good job. Name?
Madison,
What do you do, Madison?
I build CRMs and automation development.
Wow, we have Keep.
I do HIGH-YEILD.
So we're like little people?
No, they're great.
We have 50,000 emails, is that good?
Yeah, that's amazing.
And we did it in 3.5 years.
That's incredible.
Because we merged ecosystems. Before that I had 1,000.
That's awesome.
So what do you got?
So I, probably a few years ago, I'm just turned 30, so I think I was like 25, I got a premium valuable universal life insurance policy.
Okay.
Mostly because he said you're self-employed and like that would be the best thing for a long-term thing for you to make money back and all that stuff.
Yep.
So as a young entrepreneur who doesn't have $300,000 in cash.
Understood. I went big on purpose, just so you know, but don't let that deter anybody.
Okay, so
Yeah.
what does that look like? Do you get another policy like what I have? Do you merge them?
You
Do
know,
you add something to it?
we would sit down and go over everything with you, tell you the pros and cons, and let you decide what that would look like next. If somebody says, yeah, this isn't good, it's not the right thing because you put time and effort into it. So I'd like to see what that looks like. If it's a high cash value IUL, there's a real good conversation there. You'd want to be able to look at the true interest rate, not like they'll say, hey, it's going to be the S&P 500, but the truth is it's really an option based on the S&P 500. So the cost of insurance each year increases, so we'd want to see what that looks like when you're 45. Is it eating into your cash accumulation? If so, what does that look like? What happens if the market stays the same for 10 years? I know it can't go below zero, but still your cost of insurance goes up every year. So these are good educational.
I'm locked in because I did it before I was 27.
We'd have to look at that to look at the fine print to see if it's actually accurate, right? Because you want to be able to look and see what that actually says behind the contract itself. But yes, it's a great question. Love to sit. Did you click the thing and take a picture and do?
I did.
Awesome. So that's what you want to bring up in the thing you want to talk about.
Okay,
All right. Any questions? We got like a minute left because I want you guys to have more energy for the next speaker. Yes, sir.
Will you put the QR code back?
He wants the QR code. Yes. Who didn't do the QR code yet? Come on, be honest.
Okay.
Oh, shit. Start over. Just go to the QR code. Yeah. See, I always thought, I'm not good in technology. I'm really not. But, you know, it is helpful. And the QR code is amazing. Who didn't take a picture yet? And is there any other questions? Love to answer questions, guys. What about dopamine? You want to talk about dopamine? Dopamine in the brain? The firing and the wiring? It's real. Listen, I did a video last night and I told on myself I was scrolling for an hour. And then I watched 3 episodes of a Netflix show last night. And I woke up in a bad mood, right? So then I meditated, then I did a crisp 40-minute walk. Where are we staying? What town? Where are we? In Orem. So me and Eddie did a 40-minute walk, so I felt ready for today. So it's about really understanding what that looks like and being able to kind of make good decisions, because I didn't want to work out. I was like, you know, I wasn't feeling good, and it really comes down to that. Any other questions? All right, well, thank you folks for your time. I'll be here for another couple of hours. I look forward to introducing you to my team, hopefully. And guys, gals, this is great. I remember when this was just a warehouse. What they've built is special. You've spent money and time to be here. Maximize it. Take full advantage of it and make sure you're in the right spot. Thank you so much. Whew.